Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 28th of April. I'm Phil Carroll.
And I'm Kevin Hornsby.
And what a week it's been, coming to you from Johannesburg. So here we are, sat in the lobby bar, just about to have some dinner quite late. We've had a bit of a trip around out towards Pretoria and the mine sites, which we'll come on to later. How's your week been so far?
Yeah, it's been good. Been lots of things going on. Been talking to lots and lots of people about lots and lots of different things. So yeah, it's all been exciting stuff. Bit of a disaster plane journey, but other than that, everything's hunky-dory.
Good stuff. It's obviously a lot warmer down here than it is back home, so it's nice to actually get down to some sun. I know it's probably a few degrees cooler than you're used to, but it's been a good day today. So, and obviously, what a jam-packed show we've got for you this week with 4 guests talking. So let's get cracking on it, shall we?
Yep, let's go.
Okay, I mean, some of the news stories that dominated the headlines this week was Rishi Sunak's Rwanda bill, which aims to send some asylum seekers to Africa. It's passed after a long parliamentary debate, despite missing the initial spring target for flights. The bill, which faced significant opposition and criticism for its potential human rights violations, intends to deter perilous migrants' crossings and disrupt criminal smuggling operations. Sunak emphasised that the legislation is a major shift in addressing global migration, asserting that illegal entrants cannot stay in the UK. Critics, including the Shadow Home Secretary and various charities, have denounced the plan as costly and legally questionable. So what do you make of this one? I mean, is it a case of Rishi making it happen at whatever cost to the taxpayer? We've had Labour's Chris Bryant alleged it will cost more than putting up thousands of people coming to the UK in the Ritz Hotel. His statement said it would be much cheaper to put each one in the Ritz and send all the under-18s to Eton. That would cost a great deal less than what is proposed.
Yeah, I don't really have a strong opinion, but Rwanda's a nice place from when we visited it. But the scenario is it's supposed to be classed as a deterrent. So, yeah.
I mean, there's some reports coming through saying that people are now moving to Ireland instead. I mean, there was a big faux pas on the news on Question Time last night, where basically someone in the crowd who was from the Congo said, but the problem is we're coming from the Congo, and the Rwandans are actually fighting them, some rebels on that Goldman, near where we went to Lake Kivu. So what happens if they go into England, then they're deported to the country that's fighting against them, these rebels. It's a really crazy situation.
It is, but it is what it is.
Okay, then we also had King Charles set to resume public duties following a positive response to his ongoing cancer treatment, as confirmed by his doctors. Buckingham Palace announced that the 75-year-old's medical team is encouraged by his progress in starting outpatient treatment. So great news to see King Charles finally resuming public duties.
Yeah, it's good news.
Bit of positivity.
Yeah, good news.
So here we are, heading out of Johannesburg, heading up to towards Pretoria. You've landed quite late, didn't you? Had a bit of not a great start to the trip, did you, today?
Not the best. 4-hour delay and...
4-hour delay, and you knew about it before you'd even left home, didn't you? Which is even more of a kicker.
And a singing football fan for most of the night.
Yeah. How does that work?
Drunk
Moroccan fan heading down, decides to get on it before the game.
Yeah, and then decides to try and entertain everybody on the plane who wanted to sleep. So
Brilliant.
Yeah, that wasn't the best, but here we are anyway. We're in South Africa.
So this time last year, or probably February of last year, we had headed to the Inyoni plant, Jubilee's PGM and chrome processing facility, and now we're heading up to the Windsor Eight plant, which is where they process the chrome. So we'll be seeing that operation. Apparently it's larger scale, isn't it, than Inyoni? And then they send some of the PGMs then sent off to Inyoni then for the processing there, isn't it?
Yeah, which is only sort of a kilometre away or 2 kilometres away. So yeah. So we'll talk to you again in a minute when we get there.
So we finally arrived at Windsor about an hour and a half outside Johannesburg, and we've just had a bit of a briefing with the team in the boardroom, gone through some of the presentations for the Windsor site. What do you make of what we've seen here at site so far compared to Inyoni in terms of scale of operations, Kev?
Yeah, in terms of Inyoni, it's probably not quite as big because of the that has both things. It has the PGMs and the chrome. But yeah, I mean, it's slick operation. You can see as we climbed up to the top of the gantries, and you could see out, and you could see the process where the run-of-mine stuff comes in.
Separated for size, isn't it?
Separated,
oversized,
crushed again, and then goes through separation and spirals.
And it really is just water flotation. That's one thing. It's not like the Rowan plant where there's all these reagents used, and it's literally like it's more of a purified process where they float it off, use water flotation, and goes through the spirals, as you say, and then they get this chrome concentrate, which is about 40 to 40.5%, isn't it? And it's described as almost like a sludge, isn't it?
It is. It's like a sludge, and we put it through our fingers, and it was, very metallic. But that's then shipped to China, and
there's about 40% that goes into the smelter over. You can see in the distance, isn't there, in South Africa for the domestic market as well.
Yeah, and they're doing a lot of the processing for the big chrome company as well. So you can see that in the distance that's also happening as well. So very efficient operation. Obviously, the margins are pretty good at the minute with the chrome selling for $250+ a ton, or the chrome concentrate, I should say. So there's a nice margin in there. This is basically something that is modular, even though it is pretty big in terms of size and the amount of room. This is what is then going to be replicated all around.
And then we made our way to the Jubilee headquarters and caught up with Leon Coetzer, and this is what he had to say.
Okay, yeah. So here we are with Leon Coetzer, CEO of Jubilee Metals. Welcome, Leon. How's things?
Oh, they're doing really well, thank you.
Very good. So obviously we're now at the headquarters of Jubilee. We've been to the Windsor plant, and the previous year we visited in Yoni, and we're blown away by the operations there on site. Just talk us through, Leon, what we've seen today at Windsor.
Yeah, I think what you saw today is a perfect example when we often speak in the media about our modular expansion. Today at Windsor, you saw what that looks in real life and the sheer size of what a module is. People often think the word module means small. It doesn't. It just means that it's repetitive. And today you visited our chrome facilities. You saw how we make the product, how we make our chrome concentrate, and why it's so successful in our business.
Yeah, we saw the big piles of chrome concentrate, which looked just like big piles of black licorice, really, when we saw it. And we saw how well organized each one of those is. So the Windsor one, you were also talking now about the development to move to, I think it's 3 million tons of run-of-mine, and then 5 million tons of run-of-mine come 2025.
Yes.
So tell us how that's going to happen in terms of these other modules and where they're going to be based.
Yeah, I mean, we have a very clear path for expansion. What you saw hopefully today was that what we do is taken such a leap ahead for this industry that the competitors just are battling to first comprehend and secondly try and catch up. So we have a very clear path to take our production profile, as we told the market, beyond our 2 million tons of product that we are pursuing. And that simply is done by replicating these modules. Tutsi is the current project in focus, where we've told the market we're going to put down 2 modules. The second module is currently in construction, but we have the ability to make that 2 into 3 or 4 modules at Tutsi, where Tutsi alone can then reach, in its own right, 600,000-700,000 tons of product in its own right. And we are already, and will bring to the market, the next project that follows Tutsi, where we're currently running trials. We're making a very high specialist, high-grade chrome product. On the back of that success, we'll be pursuing that as the next expansion of our chrome business, all driven from the chrome's cash flow, generates its own balance sheet. So really the business has got a very clear expansion driver ahead of it now.
Yeah, and we were talking about the PGMs as well in terms of this ability to produce this much chrome is going to allow you to be choosy with the PGM stuff that you use, which hopefully should enhance the take-up of PGMs as well.
Yeah, it's a very nice word, choosy, because I think it actually describes exactly that luxury, to have ample PGM tails from your chrome modules where you can prioritize the quality PGMs, because PGMs are not all the same. Depending on where they are mined, from which reef they occur, your ability to make very cheap, high-quality PGMs differs. And we will have that luxury to be that choosy on our PGMs.
And some of them, I think, were as high as like 100 grams per ton or something like that, wasn't it?
Yeah, well, some of them recover very fast. So we typically measure our quality PGMs and how many tons do we process to make an ounce. And if we are processing down to 10 tons of waste from our chrome plants or 15 tons of waste to make a PGM ounce, you are down to $550 an ounce, which is a strong margin even at today's low price.
So really, it's a credit, isn't it, in that respect?
Oh, totally. It's a credit on top of the flexibility we have to utilize it.
Yeah, because there are no more capital costs involved in this. And really, because this company is going to be chrome and copper, the PGMs are only going to be a credit. There is no point in you spending more capital to try and increase the PGMs, especially with the volatility of the PGM market over the last probably decade, isn't it? It's been up and down.
We'll be opportunistic. We'll be opportunistic in the sense that if there's PGM capacities at some of the other large processors, and there's a lot in the market, you'll see of companies cutting back in the PGM market, we'll be opportunistic in which of these capacities we can access to process more PGMs through that, because we have this luxury to be choosy, as you say, on when do we do what with our PGMs. While in the meantime, we make a profit on our PGMs because it is a byproduct of what the chrome we produce.
Very good. So we're heading to Zambia tomorrow, Ndola, and so are you. So you've just told us. So what's going to be happening in Zambia?
I know, brilliant. I'm so glad you are visiting Zambia to see, now that you've seen South Africa, is to work to identify and see the replication in the business model in Zambia. Zambia is, in the same success we have in South Africa, is replicating what you've proven to work, which you'll see at Rowan, currently being completed, is that replication of that module, and then to speak to the team, and you'll be taken to these facilities to show how many of these Rowans can be replicated because of our ability now to access the copper, as in South Africa where we access the chrome, out of reefs people had forgotten about. And that's the drive that now you'll witness in Zambia, is how fast that can be replicated in Zambia, because the resources required to feed the process we've designed is now being secured very fast in Zambia.
And IRH are moving forward fast, I presume, in terms of your project, but also in terms of bringing on their copper purchase online, I presume. When are they likely to start producing from the mines?
Yes, I mean, the one thing is the copper price that's driving that urgency, but quite correct. Mopani transaction, they've got underneath their belt, and they have deployed their teams, and Mopani is already operating, and already operating at high efficiencies with their involvement. And the waste rock project we've done with a joint venture with them is another beautiful example of the second leg of copper we look to produce with them, which is copper from surface. And OB happens to be one of the largest, and they are as eager as us to get that operationally as quickly as possible.
So copper now touching 9,800.
Yes.
What percentage margin does that increase your profitability by?
Oh, of course. We've told the market that we look to produce copper below $6,000 a ton, all in. So if you're up to 9,800, you're running on a very strong margin of copper. It also is the right time to ensure that you accelerate in the near term your expansion, to expose yourself to this copper price and fundamentals of copper being so strong.
Yeah, I mean, I remember you saying at Cowboy last year that you actually get a premium to that rate as well, so you must be close to 10,000.
Well, because of the grade of copper cathode we make, yes, we make A-grade copper, so you do enjoy a premium on that copper. And of course, the way the world's going with our copper coming from surface resources, our carbon footprint to make this copper is significantly lower than a traditional mine. There's other benefits that the future holds as the world moves towards far more strictly implementing the carbon footprint, credits for that carbon footprint. So that's a future that's becoming very near term.
Which is very good, but there seems to be a few countries just ignoring it.
Yeah, that is true. But again, your real end users are the drivers of that force. So if you look at the EU regulations, that the BAM, as they call it, that's been launched, the US looking at it at the moment, the end user will ultimately enforce the rules down onto the resource producer or the resource miner. And that'll force compliance in the end of all of us.
Okay, very good. Well, we wish you luck in terms of what things you're going to be doing in Zambia, and yeah, we might bump into you. You never know.
Yeah, excellent. I can't wait to hear your feedback.
Thanks very much, Leon. Let's move on to our second guest this week. We're joined by Colin Bird, Executive Chairman of Galileo Resources. Welcome back, Colin. How's things?
Not too bad, Phil. And you?
Yeah, all good, thanks. Gearing up now, just packing some final arrangements for the trip to Zambia, obviously. And I want to say thanks for hosting us. But I think we take this opportunity really to go through all of the assets within the portfolio of companies that you're chairman of, starting with Galileo. If you'll talk us through Leon Coetzer potentially.
Leon Coetzer, and of course that's traditional copper belt, pretty close to Mufulira. It's very, very close, and Mufulira was one of the big mines within the Mopani complex. Mopani just being acquired by the Abu Dhabi IRH, which is the investment company. They spent $1.5 billion, I think, for a 51% interest, and are going to be, and are in the midst of developing that mine. But this is past records show that it could be 75 million tons over 2% copper. For the life of us, we've worked to try and find the underlying document for all this, but we found references to it in the archive. But can we get the actual report? No. We can get things like the deepest hole is at 1,250. When we acquired this project, we knew that it was probably big. This address was absolutely great. It was typical Mufulira series. And, it was a sort of extraordinary situation to be in. And we welcomed the opportunity to get it with Cooper Lemon. We did our first visit to the Kalalushi courtyards, which I understand you guys will be going to on your visit, which is a great place to be because this country, Zambia has kept its old core very, very well compared to a lot of, probably a lot of jurisdictions. And we went in there as you do, and the first thing we found was a miserable looking rock, but strange, like kind of a black shaly stuff. Run an XRF over it, which they wouldn't have had the advantage in the old days, and it threw up over 2% copper. And so we reworked the work resources and looked at the old logs, and that's going to be added to the benefit to us, which made us look at the surface there. And of course, the black shale appear, and yes, it does. And we're working as we sit now and getting more results in. But it looks like what was a very onerous pre-strip of about 30 meters was in actual fact not there. It's more like 10 meters. And there's a low-grade and medium-grade mineralization right down to the ore body proper. So our plan's there to do a pit for 4.5 years, 5 years or so, then go out of the pit and into underground down to about 550, 600. And quite frankly, below 500 or 600, the level of definition is not enough for us to put our nose arts on whether or not it's a great big mine, or in actual fact, it's, that it is not a big mine. And so we actual mining plans curtailed it to about 550, 600. As I say, open pit, from the open pit into the decline. And then, of course, that gives us 2 or 3 years to test the veracity of the suggestion that there's a deep body and a rich ore body down there. And we will have, by that period, tested it. Of course, if we test and find it, then that makes the decline, the second phase, somewhat redundant. And companies bigger than us will have to do a deep mine because, the plan C would make plan B redundant. So it would then just be an open pit. And we would want him to be working with others to develop what would be the natural extension to Mufulira. Of course, IRH would seem to be an obvious candidate, having acquired Mopani. So I'm sure we'll be talking to Mopani, who's got a concentrator, and that concentrator will be sort of thirsty for more feed. So that's the general plan to get the open pit working and to test for the deeper ore, and at the same time planning the interim underground mine. Should there be not the continuity we think there is. That's Leon Coetzer in a nutshell.
So what about Shinganda? Tell us the type of mineralization and stuff that we're going to be seeing there.
Shinganda was a project which Vale, the Brazilian company, I've spent quite some time on, developed what they called the Garrard Trend, and that was the be-all and end-all for them. And they had some really nice intersections. Quite frankly, when we first moved in, so did we. But it didn't take us long to find out that the Garrard Trend isn't the be-all and end-all. It's there in the reckoning, and it's there in the story. It certainly doesn't drive the mineralization. We feel that it could be an iron IOCG model. There's a big intrusive in the southwest. There's a big intrusion in the southeast. As you go west, the gold values have been recorded as very high, and that's hematite and gold in hematite, sorry. And to the east, you've got a predominance of copper with lower grade. But what we have found is we've found a sort of a big cheese-like injection we call it anchorite below the hematite. And that's what's driven those pleasing results that we reported not so long ago. And it looks at least 2 kilometres long, and we're postulating up to 6 kilometres in strike. And it's about between 60 and 90 metres deep. If you do those calculations, you're looking at a body anywhere between 15 million tonnes and 25 million tonnes. And a grade, we're talking about anywhere between 1.5 and 2%.
So just for anybody who's not sure, that's iron oxide copper gold ore deposit is the IOCG.
That's correct, which is this Mount Isa top.
Yeah, obviously the copper gold. So is this sort of an intrusion to surface, if you like? So this would be the black smokers type things, or not? No.
You've got to look at it separately, because this anchorite that we're drilling, we've made our main target. It's such an obvious target. It's limited, but it can be as high as 25 million tonnes. It can be good grade between 1.5 and 2. Very easily defined, and we're going to drill in there for the target. It is actually the dripping roast, so we're going to drill that. Meantime, is the pooling below the intrusive? Because classical Mount Isa mineralization says you've got this intrusive, and below the intrusive, the fluids couldn't get through it, and so they pooled underneath. Now, this is where the Gerard trend comes into play, and the geophysics we did. Because the geophysics, we got all the raw data from Valley, and so we reworked it into modern models. And we found the splays from the Gerard trend is where the live and fertile mineralization was. And so that's what we've been drilling and getting these pleasing results. So that's the first target, the IOCG. We've got a great team on it. We've got the ex-head of Anglo Exploration, and Mike Holman. We've got a young MSc graduate we just sent out there. We've got our local geologist. And we've got Hunter Kennedy, who's a well-known middle-aged geologist who's been renowned in that part of the world, Southern Africa, not just Zambia, who's also working on it. So we are going to be testing the IOCG theory as we go along, but obviously we're going to climb into this serious amount of, or hopefully, well, let's call it a deposit at this stage. We've not got the justification to call it an ore body, but the anchorite deposition is so clearly defined that it just has to be drilled straight away to find out whether it's 2 kilometres or 6 kilometres. And then, of course, we're going to be doing some work to the north of there. It's quite a big block of hematite containing gold. And the gold were quite high values with no copper. So we'll be also investigating that, punching a few holes into that. But the main target in the short term will be this, as I say, very, very well identified anchorite body between 1.5 and 2%, and hopefully anywhere between 15 and 25 million tonnes of copper.
Very good. Let's have a look at the big one, and the Western Foreland Copper Project. Obviously, the license there is 52,000 hectares and runs along the Angolan-Zambian border, where it's closely associated with the perceived Western Foreland geological district boundary that is potentially host to the Kamoa-Kakula deposits. And obviously, within the other suite of companies, African Pioneer and Extract, that also have licenses within that same region. Do you want to just talk us through the rationale, Colin, of having the three companies within that same area?
Once again, academia has talked about it, but done nothing about it. It was absolutely ludicrous, absurd. That everybody thought that the boundary fence between the Congo and Zambia was the boundary fence of the geology. I mean, how daft is that when you look at when God put the copper in the ground? So, but we proved concept, In African Pioneer, our joint venture with First Quantum, we're the only ones who have fired hole into it, identified all of the architecture, all of the lithology, what makes up the Kamoa-style mineralization in the Western Foreland. Normally, when you have a first like that, it's like if you go back 15, 20 years ago, it'd be like finding a set of kimberlites. You'd have been praised in all the books, in all the documents, everything, what's talking about geology. This discovery has gone largely not much talked about. But frenzied activity at the moment, you will see that Ivanhoe have set up in Angola, which is on trend between Congo and Angola, sits all our stuff, the Western Foreland, the thrust and fold bolt, and the Colweesis mineralization. We've got surface targets, which could lead to the similar thing that we found at Calambila. I sold that for 265 million a few years ago, 2009. There's similar mineralization to that, although it's Colweesis style and possibly will have cobalt with it. And then, of course, deeper will be the Kamoa-style mineralization, which is really, really very good stuff. It's flat. It's about 3.5 meters thick, and it runs up 5%. It really is a very, very nice ore body. And it's being mined by Ivanhoe up 60, 70 kilometers to the north there, just as though it was a coal mine. Board and pillar, trucks and shovels, and they're mining a old rafting material. It's the second richest mine in the world now and growing. So we're in that style of mineralization, and we're very excited about it. We've got proof of concept, and one of our companies, I'm pretty sure, will go through mineralization. I'm rather hoping that we manage to report that during the course of this year. But what we have found is proof of concept, as I said, the architecture. We've got the redox fronts, we've got the salt layers, we've got the petty conglomerate, we've got the grand conglomerate, and all of these, as I say, is part of the architecture, what makes up the thrust fold bolt. And boy, has there been some action. We are finding rocks on the surface, I won't say where, which should be 600 meters down. It has been really active and quite heavy tectonics and action in the days when the ore bodies were formed.
I will come on to Galileo. So it seems, Colin, that you purchased some shares in Galileo as it was announced there earlier in the week. So what caused you to buy a few more shares in Galileo?
Well, I think as chief executive or senior official chairman of a company, what I do to support that company, and that's what I did. It was a modest support, I know, but 15,000 quid is 15,000 quid in anybody's language. I, like anybody else, first of all, I'm a company officer. Secondly, I'm an employee. I'm a board director, but I can still spot the bargain. And quite frankly, if people aren't going to invest when there's such a mass disconnect with a rising copper price, everybody talking about the shortage of copper, knowing that the company has got good copper projects, why wouldn't a mining investor invest? And that was my rationale, that the company represents extremely good value at prices higher than 1.2. So that's the reason and that, with all my, I progressively buy as I go along. And whenever I get the opportunity or I see a situation where circumstances dictate that the price is, there's a disconnect between price and probably reality, I invest.
So moving on to African Pioneer in Zambia, tell us a little bit about, why. I mean, I know you've talked about the Western Foreland or the Northwest Zambia, if you like, because you've got African Pioneer, you've got Galileo, you've got Extract. And I mean, I've looked at the map when Hunter gave us a bit of a geology lesson when we were in Namibia. So try and just explain to people how that looks and what is the situation.
Well, it was the first joint venture. It was the first 4 blocks of ground. We put them onto option to First Quantum. The option 2 last year and the option 2 at the start of this year. They like what they see. And as I say, we've proved the concept. So First Quantum are very pleased with what they found. We've drilled shallow and we've drilled deep. And we put the quarterly reports on the market. And I think First Quantum are bringing in the machines again. We've had an exceptionally dry season. And so they're able to get in quite early. And we'll be drilling soon. I think that you're looking for these graben, which is kind of the unique set of circumstances which will lead to mineralization in that particular architecture. So from that point of view, First Quantum are excited, we're excited. First proof of concept for the architecture of the ground, and extremely well placed in the projection of the Western Foreland. And we know the Western Foreland's there because, as I say, we've got the petty conglomerate and the grand conglomerate. So it's very exciting, of course, that we're also in African Pioneer down in Namibia with the Ongombo project, which has got a mining license. So that's good news. And a small pocket of ground down in Botswana. But our key there is this joint venture with, of course, Northwest, which is bang on trend with the Kamoa mineralization of Western Foreland. And we're hoping for a result this year. We could only rely on the truth machine, but it's extremely well placed, correct architecture. Then the more we've drilled in the past, the more we've learned.
Okay, then, Colin, let's talk about the other one that we're going to have some dealings with. And I suppose one after Australia, which I have to say Australian assets are looking more favourable as the copper price increases. But that's obviously not what we're talking about now, but that's just a commentary. What about Extract and Zambia? Because you are focusing on it now. Obviously, after selling the rights out for the gold that we had, Extract is cashed up and going to continue to be cashed up over the next period of time as it receives payment. It's looking like your assets are worth more than the cash value of Extract. What are your thoughts on that?
Yeah, well, again, that's got projects up in the Northwest as well. Nicely positioned. Hunter's been looking at them and tying it into the old story, but they're definitely Western Foreland. Again, mineralization well positioned. We announced the Silver King project the other day, and that immediately butts up to that big sale with the Chinese company that Cooper Lemon brokered. We're involved in brokering. That's a huge well, it's not huge. It's a nice sized copper gold project, and that's an IOCG. But we've got the extension to that, which BHP I think held in the past, and we've got an extension to the extension, so to speak. So now we've got a great big area called Silver King. There's already one breccia pipe in it, which was drilled by Glencore, and you will have seen there's some quite large grades there and a lot of chalcocite. We think 800 meters away is another breccia pipe. We also are testing the theory that the stock works around. So what was considered discrete open pits going into underground mines of small pipes, almost like diamondiferous kimberlites, might in actual fact lead to one big open pit situation. And that, of course, goes all the way into Kakui, and there may be some join up there, which we're not sure of. So we're quite excited about Silver King. And that's one of our projects, which is out of the northwest, different style of mineralization, but highly prospective with a very good address. So what our plans are for extract is very much the same, probably focused very much on Zambia. And, you know, that it's no secret to anyone. The licenses are very difficult to get nowadays, but we've put the cornerstones down for a couple of licenses over a year ago, and hopefully we'll procure those licenses, which will add to our stable. We do intend to do small mining where we can, but we're going to be very selective in only projects which really are de-risked to the extent we know the tons, we know the grade, easy to mine and in close proximity to a plant, and we won't have to build a plant. So our criteria there for selection is quite well defined. So we're excited about Silver King, we're excited about the Northwest, and we're doing very much of the same in Zambia with a couple of projects identified.
Very good. So if you look back, I suppose it's now 6 or 7 years, maybe longer, to 2017 when you first started this plan. What's the probability that you're going to be proved right about collecting these grounds and assets in Zambia, Botswana, Namibia in terms of copper?
Well, the rationale is working through. Of course, the rationale back in 2017 my forecast, my predictions, my vision was based on the demand. Quite frankly, the shortage of supply has taken me by surprise. So I'm not going to claim anything for that, Kevin. I could do, but I'm not going to. All the evidence was that there were some nice mines in Chile were going to be developed, which would add to supply, but the demand was going to be so much that there'd be room for much more copper, and that would be the best metal to be in. At that stage, I readily admit I couldn't forecast a shortage of supply. And the shortage of supply, Kevin, it makes life very desperate. It's not even a commercial argument. It's a very, very serious shortage of supply of copper. You know, you don't build these things in 5 minutes. If there were mines in Chile, those big porphyries, they take 15 years from discovery. Even the type of mines I'm talking about, Calambila took 6 years to get going. You know, these things don't get going in 5 minutes, and the undersupply is looming on us now. That's why China announces every second day that they're slowing down. They won't be building many more apartment blocks, and industry is slowing down because they're terrified of this slowdown in availability of copper. And you would have seen that in the refining houses in China, that if they can get concentrate, they can almost get your concentrate done for free. So the competition to get concentrate. So, and then if you look at London Metal Exchange prices. So first part of the equation I got right, i.e., there's going to be a massive surge in the copper price. You know, I don't want to blow my own trumpet, but I think I was probably 2 years out by the timing. I thought it would be happening around about 2021, 22, not now. So we had to wait for it. I still think there'll be a couple of drops in the copper price before we would really get going. Of course, there are those around, companies and countries, who really want the copper price to go down so they can gear up. And they have a way and the might and the power to make that happen, but it's not sustainable. So I would not be at all surprised by a couple of dips, and a dip being 7-8. And then I expect by the middle of next year to be unstoppable. I don't really care about when people start talking about 15. I take it with a pinch of salt. There'll be some eyes, but I could see a steady state. I could see a steady state copper at 10.5, Kevin, and that would
which would make all of your projects very feasible.
Make them all very attractive. In fact, anybody who's got a copper project now ready to bring in production, who could actually forecast a sustainable $10,500 would be a very happy bunny indeed. Because probably first got on the drawing board, they're on at 7,000. So when you've got 3,500 going straight to the bottom line, makes a lot of projects look a lot more rosier than they did.
Yeah, indeed. Well, thanks for your time. We will obviously be reporting from Zambia next week, and I'm sure we'll speak to you again shortly.
I think you'll have a very good visit. Zambia is on the up. The town Lusaka is really, every time I go, I'm even more impressed. There's a lot of activity. This president is committed to the growth, and he's committed to the growth of the copper industry in particular. And I don't know, I see change every time I go, so I think you'll enjoy your trip.
Colin Bird, Executive Chairman of Galileo Resources, thanks very much for your time.
Thank you. Thank you very much.
Okay, so here we are on our way to Ndola in Zambia. The first roast above the clouds.
Mile High, is it? Not hopefully not the Mile High Club, but it's 39,000 feet.
39,000 feet. I've found nice clouds. It's nice and sunny. And we're just coming into start our descent to land in Ndola. So, yeah.
So let's have a look at some of the movers and shakers of this week. The first one that I think arrived on Tuesday morning was the announcement from Sovereign Metals that they'd appointed Dr. Surinder Garg as Chief Technology Officer to advance the graphite strategy at the Kasia Rutile Graphite Project, which is set to qualify its graphite for lithium-ion battery anodes, bringing over 25 years of metallurgical expertise, including a significant work in graphite purification. With CCO Dr. Garg will focus on testing and qualifying the graphite for battery manufacturers and securing off-take agreements. So that was really well received. Obviously, we caught up with Sapan in the week, and let's have a listen to what he had to say. Today we're joined by Sapan Guy, CCO of Sovereign Metals. Welcome back, Sapan. How's life?
Yeah, life's good, Phil.
Very good. Better after that win at the weekend, I guess. It's on tenterhooks there at the end with the penalties.
Yeah, it's not exactly one that I'd go ahead and celebrate as much as Quinn did. I
think he was a bit embarrassed when he looked round and saw that none of his teammates were celebrating.
Well, all we've done is booked ourselves in for a loss in the final. So
yeah, exactly.
You never know. You never know. Finals are finals. It's a one-off.
Yeah.
But maybe the bet on the biggest winning margin ever in an FA Cup final. I wonder what that is. Mind you, last year, what was the score in the cup final last year? All you know is you lost.
Yeah, I don't know. That's all you need to know, isn't it? Write it down. The loss.
I don't remember what it was, to be honest. But I don't think it was significant, was it? It was maybe 1-0, 2-0, something like that. I don't know.
Yeah. Well, it was
anyway.
Good. Well, let's have a look at the latest announcement. Obviously, we just saw the news that the company has appointed Dr. Surinder Garg as Chief Technology Officer, Graphite, to become the graphite strategy at its Kasia Rutile Graphite Project, which is set to qualify its graphite for lithium-ion battery anodes, bringing over 25 years of metallurgical expertise, including significant work in graphite purification with CSIRO. Dr. Garg will focus on testing and qualifying the graphite for battery manufacturers and securing off-take agreements. Kasia, recognised as the world's largest known rutile deposit and major flake graphite resource, aims to be the top low-carbon graphite producer. Recent pre-feasibility studies and substantial investment from Rio Tinto highlight its potential as a critical mineral supplier for the electric vehicle battery market, with ongoing tests confirming its suitability for high-quality lithium-ion batteries. So tell us more about this appointment, please, Sapan, of Surinder Garg.
Yeah, sure, Phil. So, as you know, the Kasia project that we have in Malawi, it's a unique deposit in that it's almost 2 for 1, right? It's one deposit, one company, but you've got two projects within that same ore body. You've got the world's largest rutile deposit and the world's second largest graphite deposit. So graphite's really a byproduct of us building a rutile mine out. But even as a byproduct, it would make Sovereign the biggest producer of graphite in the world. We'd also be the lowest cost producer of graphite in the world. So it is quite an important byproduct of our rutile work. Look, graphite's interesting because obviously, as most people now know, it makes up to about 50% of a lithium-ion battery. So even though it's called a lithium-ion battery, the major components are graphite, nickel, a whole bunch of other things, even copper in there, and less so about the lithium, funnily enough. In order to get graphite into a battery, it needs to go through a number of stages of qualification. And usually those stages of qualification take anything from 4, 5, 6 years from understanding your graphite product. Now, we're quite lucky in the sense that before we had found Kasia, most of our work at Sovereign had been done on graphite in Malawi. So we already know what the Malawian graphite looks like, how it acts. We've done a load of test work back in 2016, 17, which you can find in our RNSs from back then, or ASX announcements as we went enlisted. But you can happily go across and find, all the electrochemistry that we had done, all the purification work we had done, And the graphite at Casilla is basically identical to the graphite we had tested back there. So we're pretty hot to trot on this graphite. Now, we've appointed Surinder. Why is that? Because, ultimately we are explorers, we are developers. We're a bunch of geologists, engineers, accountants, bankers who are trying to make the most of having found a tier 1 discovery in Malawi, right? So from basically the PFS last year and Rio Tinto's involvement last year, we've done a lot of building out the team. We have appointed a whole development team that's built something like 10 African mining projects from feasibility all the way through to construction and operation. We've appointed First Quantum's social team, who now work for us in Malawi. They were in Zambia. We've appointed a lead ESG officer, and he's ex-Rio Tinto, and he was ESG manager at Simandou project. Now, the Simandou project that Rio Tinto's kind of green-lit recently is Africa's largest mining and infrastructure project. So he knows a thing or two about big projects. So we now have him as part of our team. Obviously, we appointed our new managing director, Frank Giga, towards the back end of last year as CEO, having been country manager before, and he knows how to develop a project in sub-Saharan Africa. So we're putting all the right chess pieces on the board here. Surinder's appointment is just that, right? So he's the one who brings all the knowledge of how does the graphite in a mineral deposit end up in a battery. And he's already proving his worth, I should say, in the sense that he's teaching us things that we didn't really realize. And I don't think many of the graphite world or graphite investors realize, like the importance of how the graphite works in a battery starts from from the point you dig it out of the ground. So how you
handle it and how you treat it, exactly that.
You mine it, how you handle it, how you process it affects how it works within a battery. And look, he's had 25 years of doing ore to anode graphite strategies, of working graphite test work programs, doing feasibility studies on battery anode plants. He knows the whole shebang, right? So for us to have him on board is just is a massive win.
You sounds like you're really taking it serious. You mentioned it's almost like aces in places, like building the A team, as you alluded to. Frank Hager came on board as well. He's got the experience, 25 years. So it's and then obviously with the strategic investor Rio Tinto on board as well. I mean, it sounds like you're really taking this very seriously.
Look, it's a tier 1 deposit, right? In every sense of the word, right? It's huge. It's the biggest rutile deposit, second biggest graphite deposit. Anyone who operates it would be the market leader within the titanium industry, within the graphite space, and therefore very important in the batteries and electric vehicles supply chain. So yes, we are taking it very seriously. We're essentially building out a team that matches the kind of world-class quality of the project itself.
And from the point of view of them moving forward, what are the next steps?
Yeah, so look, towards November last year, we said that we had initiated, or we were partway through a graphite bulk sample program. So on the graphite side, what's next? We're getting that material over to labs. We're in South Africa, in Australia. We're figuring out what that graphite looks like. A lot of it under Surinder's kind of initiatives and under his direction. So we're figuring out exactly what that part of the investment case, the graphite part of the investment case, looks like for us. For us, I want to make this clear, we're not going to become a battery producer or a battery anode producer or any of that. We're going to stick to our knitting. We are a mining company. We're going to mine graphite that then will sell to the battery makers, etc., or the end users, the car manufacturers. But for us, as we stand here, we're not going to be doing that business. That involves a lot of chemistry, a lot of capex, a whole world that we just don't want to get involved in. Instead, our strategy is to produce the most graphite that can be used for that industry and do it at the lowest cost. I mean, when I say lowest cost, I'll put that into context. Current price for your finest graphite, so the lowest price graphite out there, is around $500 a ton. most of the graphite projects that are waiting in the sidelines to be built have feasibility studies, scoping studies, etc., out above $500 a ton. We would be producing graphite, more graphite than anyone, and an incremental cost of $182 a ton. And our graphite has quite a nice, what's known as a flake size distribution. So you have your jumbo, your mid-size, and you have your fines. Now, the mid-size is really what ends up in a battery. You can mill your jumbo flakes down to a mid-size, so they can end up in the battery as well. So for us, we're just looking at the battery market. We're going to just absolutely flush it full of this low-cost graphite.
Great. So we look forward to hearing from you in the not too distant future about the next stages, and hopefully we're gonna get out and see you in Malawi at some point over the coming months. Let's see how that all pans out.
Yeah, look, lots happening on the ground. There's certain things I can talk about, certain things I can't talk about, but watch this space because we're expecting a lot more to happen over the coming weeks.
On that, we'll say Sapan Ghai, CCO of Sovereign Metals. Thanks very much for your time.
Thanks, Bill. Thanks, Kevin.
Cheers, Sapan.
Then there was an announcement on Wednesday for Kavango. Basically, they announced promising first assay results from their Hillside Prospect 2 gold project in Matabiland, southern Zimbabwe. An initial drilling at hole BRD 001 reached a depth of 400 metres, targeted mineralisation beneath artisanal workings, and the hole revealed a 7.2 metre wide zone at 50 metres depth containing high-grade gold at 9.95 gram per tonne, including a segment of 1.6 metres at 31.57 gram per tonne. So promising results. I spoke to Ben Turney in the week. I'm hoping to get him on the roast at some point in the not too distant future. And obviously remember Paul Johnson was on last week. He mentioned Kavango, didn't he, as one of his picks for 2024. So they've also got assets in Botswana. So we'll hopefully be covering them in more detail.
Yeah, I think Paul had a lot to say about Kavango, so looks like a very interesting project with quite sizable assets, especially in terms of the gold. And Paul managed to take the Michael out of Ben Turney quite a lot last week, so we're looking to hopefully speak to him and see what the situation is.
Good. There's another one that piqued interest on Wednesday, was from a company called Filtronic. They design and manufacture products for aerospace, defence, space and telecoms infrastructure. Basically, they have announced a significant strategic partnership, commercial agreement with SpaceX, Elon Musk's space program, and there's been an initial purchase order of $19.7 million for delivery in 2025. So looks promising, that one, doesn't it? Yeah, I can't imagine there's a much bigger company to do business with than someone like SpaceX, really, in the technology.
Well, you're going to attract a lot of investors, aren't you? But as soon as you mentioned SpaceX, so
and it opened up about 50% and finished the day around 100% up. So the market really, really liked that one. It's a game changer. Then there was one from Acuity Risk Management. They announced the launching of the new counter-terrorism risk management report called Storm, which integrates with the current Stream solution. And basically, it's under this new rule, isn't it? This protect duty legislation, which was also known as Martin's Law, that says that if you have a gathering or events that attract more than 100 attendees, then you have to put these specific security measures and basically procedures in place or mandates to maintain that. So we caught up with Kerry Chambers, CEO, in the week, and this is what she had to say. Today we have a special guest, Kerry Chambers, Chief Executive of Acuity Risk Management Limited. Kerry is here to discuss the launch of Storm, their innovative counter-terrorism risk management report, recently unveiled at a significant event at the House of Commons. With terrorism continuing to pose a critical global threat and the UK ranking as the third most impacted country in Europe in 2021, the need for stringent security measures has never been more urgent. Storm is designed to align with upcoming governmental mandates, such as the anticipated Protect Duty legislation, which underscores the necessity of comprehensive risk assessments for large public events. This tool not only aims to bolster security, but also ensures organisations adhere to new legal requirements to avoid severe penalties. Today, Kerry will share insights on how Storm is set to revolutionise how organisations manage terrorism risks, the role of Acuity's award-winning Stream software platform in supporting complex compliance needs, and how these tools collectively work to enhance public safety.
Let's dive in and learn more about these crucial developments in the realm of security and risk management. Welcome, Kerry.
Morning, Phil, morning.
Could you start by giving us an overview of Storm and how it integrates with Acuity's existing Stream software platform, please?
Yeah, sure. So Storm is a name of a report specifically for the counterterrorism risk assessment use case, and it's a pre-configured report that can be accessed on the Stream platform, but for those organizations that have a specific requirement in this space. But it works in the same way that Stream works. So it's a cloud solution. It's a report running off of the cloud solution, and so people will be able to access it through the browser in the same way that they access Stream.
And just talk us through what that sort of looks like without giving away too much sort of IP. I mean, would it be like there's 1,000 people at an event, there's fire doors here, someone's managing this part of the sort of, whatever it is, the facility. Talk us through what that sort of report would look like.
Yeah, so the proposed legislation changes are aiming to enhance security and create a real standardized approach to security for those venues that are hosting crowds of people will attend from the public of more than 100 people. So if you think 100 people, that's actually not a lot of people. So there are organisations and venues that I suppose struggling with the requirements that are being asked of them, of finding that it could be quite onerous and potentially quite, expensive to do that. So the reason that we created Storm was to assist those organisations that are going to be required by law to be able to demonstrate this risk assessment process has taken place. So the Storm report creates almost like a framework of key counterterrorism risks that organisations should be looking at, and then delivers those to them with controls that they could be attached to those that they should be following, and then they will have a process in terms of treating those risks. So it's no different to any other risk assessment process, but organisations that might not have a mature risk assessment process are now finding themselves, in a world where they must be able to demonstrate that. So it'll be things such as, using a vehicle as a weapon, those types of, we've listed 10 clear CT threats that all organisations should be looking at, and configured the report to show controls against that so that they'll be able to make sure that they've gone through and checked those. It's not exhaustive. So this is a report that's supposed to help people that don't have anything in place. Of course, if an organisation has a very good, mature corporate security policy, whereby counterterrorism is part of a much bigger, set of risk assessment that they're doing, then of course it can be configured to meet their processes as well. But essentially, we've tried to give people a good starting point in terms of the things that they should be looking at.
Yeah. And how big is the market? Has there been any reports run on how big the market is for the demand now? Because presumably, as you just alluded to, 100 people is not a very large public gathering. That could affect a lot of, municipal buildings, town halls, just your average marketplace. So has there been any reports onto the size of this burgeoning market?
So it's vast, because it is exactly as we just said. It's proposed to be 2 tiers of response, a standard response and an expanded response. Standard response applies to any venue that's hosting, members of the public in excess of 100 people. So, we're talking about, I suppose it's aimed at the hospitality industry, the entertainment industry, tourist attractions, shopping centres, things like that. However, just a kind of, on my own personal level, I live in a village in Somerset, and they always have a Christmas gathering,
a fete or a village fair or something.
Exactly, and things like that. They will have to have been able to demonstrate risk assessment specifically focused on counterterrorism, which will not be something that's familiar to organisations like that organise the annual Christmas events and things like that. They're going to have to be able to do that. So the size of the market, I haven't looked at, a sort of TAM for that, an addressable market in terms of a dollar amount, but it's vast because there's just so many events and organisations that are going to have to be able to demonstrate this. And it's that legislation change making it a requirement. So, if something, and, nobody's trying to scare people. These things are infrequent, but you have to be prepared. We can't always prevent them, but we can be prepared in terms of keeping people safe. And, should something happen at an event where, the public are expected to be kept safe.
Yeah.
Organisations that were included in the preparing of those events are going to have to be able to demonstrate to some kind of court of law that they were following legislation, and notes and a spreadsheet.
Yeah. Do you have a first mover advantage in the sense that you've already got the stream and the Storm kind of integrates well with the existing platform? Is there going to be any other competitors out there doing this, or have you got the sort of, you've already got that USP on it?
Yeah, I mean, I think we're an early mover in this, and that is because one of our customers, and I'm sure that I can say this because they spoke publicly for us at the event that we had at the House of Commons, is the BBC. So the BBC initially, purchased Storm for this exact requirement following the events in Manchester. And, to quote the head of corporate security at the BBC, he couldn't be without these reports now. They use them, obviously, at the BBC, they use them with their suppliers, and it gives them a clear view of how prepared they are in terms of their vulnerability assessments for, hosting these events, whether those be in bricks and mortar locations or festivals in fields, that the same kind of process has to be applied.
So do you anticipate, Kerry, that this is going to be sort of not just a legal requirement, but I suppose more importantly, an insurance requirement for these venues, that they actually have the things? And are we going to that all the way down to, church gatherings, church fetes, schools? Are we going all the way down to wherever more than 100 people reside, basically?
Yeah, I mean, in terms of who's going to be affected by Protect Duty, it is all public venues with a capacity of 100 or more, public spaces, and then any larger organisations that have publicly accessible locations. And so what we're trying to do with the Storm report is to provide a low cost, not onerous alternative to that, because organisations are going to have to, look at their budgets and make place for accommodations for being able to demonstrate that they have gone through this process. And when you talk about risk assessment to organisations that are not generally used to delivering that level of mature risk assessment, it can be confusing. And so our aim is to simplify that for them, but also provide them with reports that, should they need them in the future, they have something to be able to fall back on. It gives them that kind of complete view in terms of the event that they're trying to run from a counter-terrorism perspective. More importantly, is capturing the audit, the workflow of what's being done, when things have been done, how prepared they were for that event. And because obviously, the nature of these things, you cannot predict when they're going to happen, but gatherings of, large members of the public are frequently becoming a target for these events.
Every football ground as well is going to be involved.
Westfield shopping mall. We just saw it at a school in Cardiff. We've seen it in Texas, Uvalde, and schools are just not prepared for this at all.
They had it in Sydney a couple of weeks ago. I mean, I don't know if that had terrorism, if it was originated with the terrorism, but it was, public were in danger for lone individual with a knife. So
what sort of cost are you going to be able to do this at for the small organisations? And obviously it's going to be more numbers than it is sort of huge amounts of cost for each individual, I would assume, or each venue.
Yeah, so I mean, we would consider very low cost in terms of the investment that's needed to be able to demonstrate this kind of defensibility and the outcome and the consequences of not having done so. There's going to be a regulator that's going to be looking at this legislation change. And so whilst they haven't defined yet what those fines or anything, potentially more serious would be, the cost of having this report in the first place can help alleviate that. So, I mean, it's below 5K for the reports to be done. And so we would say that that's very, it's just a standard, for standard organizations. And obviously we have teams, Acuity, that can look at the configuration of that with organizations, but, very affordable for organizations that must invest in this. We're not talking about tens of thousands or hundreds of thousands of pounds a year. It's less than 5K per report.
But for small organizations with, maybe 120 people gathering or whatever, this £5,000 is a significant amount, even as an annual thing. It's going to be really impinging on quite a lot of small organizations, you would imagine.
Yeah, I mean, I understand that. That's the same kind of thing. If you talk about schools, will they invest in do they invest in cyber, threat protection? Will they make a choice as to whether to make that investment or not and be able to find the funding for that? That's a decision for the organisations. All I can say is it's a low investment in terms of what potentially could be the penalties for not having done that on the other side of that. So, yeah.
So looking at the opposite side for organisations that are bigger, that quite obviously need this, but I've never done it before, this is going to force them into this equation. So do you imagine that this is going to allow you to actually give them a great deal more services than just this, as in this is going to be your entry into many, many places that will then allow you to have Stream to give them an overview of their overall situation rather than just counterterrorism?
Yeah, absolutely. So the Storm report is exactly just looking at the counterterrorism use case. For the larger organisations, and this has happened, so obviously we had the launch at the House of Commons a couple of weeks ago, a week or so ago, but we have been talking with customers about this since, the beginning of the year. So if I talk about football clubs, large organisations, they have quite, a mature approach to this. So the thing that they're quite interested in is the packaged report, but then we talk to them, about other areas of risk that they might be looking at, and that leads them to look at Stream, as a more mature solution for them.
Very good. So you anticipate that this is going to be, yes, an income stream, which will hopefully be quite viable, but ultimately it should allow you to upsell to many more customers if they come in on this basis.
Yeah, absolutely. I mean, going back to what we spoke about at the beginning of the chat, it's a configuration of a report within Stream. So it's accessible for those sort of small to medium-sized organisations that may not have anything in place already. It will help them to be compliant in terms of the proposed legislation changes. But for those larger organisations that may have a process already, we can configure the wider Stream platform to be able to assist them with their risk management process.
Very good. So as a catch-all, tell us what's been happening at Acuity so far this year.
Yeah, very busy. So, we're focusing on on the US market this year. There is a focus on the US market this year. So there's been a lot of work in terms of working with our US customers, and looking at issues that are specific to the US market in itself. So there's slight, there's nuances in all sorts of the regulations I'm sure you'll be aware of. But, if I just take data privacy, for example, they have much different laws and regulations than what we would have in the UK, although, being global businesses, they have to be able to accommodate all of that. So, yeah, lots of work in terms of working with the US. The partner program's going very well. We have an announcement to put out next week, I think, about a new partner. So you'll be hearing more from us next week on that. But yeah, so very, very busy. Yeah, looking forward to the rest of 2024. We're currently in the middle of our annual audit, so the market can expect to see some results. I'm sure they'll be published by the PLC in the not too distant future.
Very good. So all in all, very busy, a business coming in, and hopefully this is going to allow you to have many more options. I suppose the legislation is playing into your hands in terms of this. So let's hope this allows many more customers to understand what's available.
Yeah,
very good. Kerry Chambers, Chief Executive of Acuity Risk Management. Thanks very much for your time.
You guys, nice to see you.
Then there was an announcement, I think on Wednesday, for Cobra Resources, and you talked about Cobra last week, didn't you, and their REE projects in Australia. What do you make of it? Because they announced a placing, didn't they?
Yeah, they announced a raise of £600,000, which at 1p, which takes them through at least the next 12 months and a lot more work in terms of the rare earths. And also in that RNS, there was some good announcements to say that it was very good results in terms of the amount of rare earths they managed to get from the in situ mining system that they've put in place. So yeah, we'll hopefully catch up with Rupert in the not too distant future and take it from there.
And they had quite a good session, I think. I looked at them on Friday. They finished the day up about 14-15%, didn't they? So it looked like the market received that one well.
Yep.
Okay, well, moving on. There was some news that dominated the headlines on Thursday and Friday. There was the Anglo offer rejection. Basically, the board of Anglo American rejected a £31 billion takeover offer from the Australian mining giant BHP.
They labelled it as highly unattractive and opportunistic. And BHP's all-share proposal, which required Anglo to undergo 2 demergers, was criticised for significantly undervaluing the company and its future prospects. This decision followed a wave of disapproval from major shareholders, including Legal & General Investment and Aberdeen. Additionally, Anglo faces potential pressure from the new shareholder, Elliott Investment, which has recently acquired a significant stake. The takeover bid comes amidst Anglo's strategic importance in the copper market, crucial for the clean energy sector. BHP has now until the 22nd of May to make a firm offer or withdraw. What do you make of this news? Because the market, it was a bit leaky, because on Thursday afternoon the shares rose about 15 to 20%, which was an unusual kind of intraday swing, and then they made the announcement after hours. It was almost like their hand was forced because maybe it was leaked.
Yeah, it's low ball. It's a low ball offer, and also I think the reality is that Anglo Americans a long time company.
It's 1912, isn't it? It's over 100-year-old South African company. They're up in arms about it, aren't they, the South Africans?
Yeah. South Africans, it was an interesting chat we had with Leon from Jubilee about it as well, because obviously it affects South Africa. So, yeah, I think, I don't know, I think BHP are going to have to pay a hell of a lot more for it than what they're looking to pay. So, let's see what happens. So, yeah.
Okay, so you've got one for us this week. What piqued your interest?
Yeah, it's Dillstone Group PLC. DSG, I think, is the ticker. And they've been in the wilderness, I think, for a few years now, because they're basically a software provider, international recruitment industry, which obviously during COVID and all of those things was not very good. But they finally got themselves back into adjusted operating profit over the last sort of couple of years. The EBITDA is increasing by 38% last year. The margin has increased by 23.5%, which is interesting because of the way they're now doing business. So we hope to catch up with the CEO in the next week or two. I've been speaking to the finance director, and he's very positive that things are moving in the right direction.
Do you know the market cap of that one at the moment?
Yeah, so the market cap of DSG is just over £2 million, with just less than 20 million shares in issue. So, it's one of those ones that I think if it has another good year going forward, and more people are now looking for the jobs online, and that's how they're doing things now, then I think it could do very well.
Yeah, good. So there was also a good announcement from Incantera this week. They announced that Tyndall Investment Management had increased the holdings in the company, boosting its stake from 11.84% to 16.4%. This increase makes Tyndall the largest shareholder in the skin treatments developer. The investments firm decision to expand its shareholding followed a compelling presentation by Incantera at a recent institutional warrants round, indicating Tyndall's continued bullish stance and active engagement with the company. So nice to see that, wasn't it? It's a bit of a good endorsement, isn't it, when one of the larger shareholder adds more.
Yeah, and obviously Incantera means they've got more cash.
There's been warrants that have been exercised as well, and also IMM still hold a significant amount, don't they?
Yeah, the Imu Pharma. So that's an interesting scenario as well. They have warrants as well, so let's see where that all ends up. And the other one I wanted to talk about was Golden Metal Resources. They had an announcement this week which basically said that they're going to start drilling a Pilot Mountain on the 11th of May, day after the anniversary of the listing. That's very, very interesting from a point of view that this is obviously their tungsten play. If they manage to increase the resource there, that's going to be a major, major positive for Golden Metal Resources. And also we've obviously got the grant side of things, but you have to think that's going to go north soon, on the basis that if they find more tungsten, which looks very likely, and the potential for the US government stepping in there and giving them a grant, which again we don't know how that's going to work out, but it's the biggest tungsten deposit in the US, so why the hell wouldn't they give the grant if you like? So.
And Oliver's out in Washington this coming week, isn't he? He's been Xing that, so that one looks interesting because that's where a lot of the decisions are made on these grants.
Yeah, and he messaged me. I mean, he's got some amazing meetings lined up. I'm sure he won't mind me saying that he's got meetings with some of the majors, so it is very, very interesting the way that's going.
Good. There was one article that piqued interest. It was shared on X, and then it made it into a lot of the Telegram groups and bulletin boards. And basically, it was an article that was written for the Daily Mail on Wednesday, and it basically said that there are rumours floating around in the city that NASDAQ, which is America's biggest stock exchange, is sniffing around London's junior AIM market. Insiders say speculation has been buzzing for several weeks that the US group is eager to do some sort of deal with the LSEG to buy AIM and bolster its European operations. So can you imagine the liquidity that would come into the market if NASDAQ took hold of AIM?
No, it would be amazing.
Yeah.
It truly would be like a game changer. I mean, it'd be like giving a man in the desert a drink of water, I think, because ultimately, wow, you know, I mean, it would make a massive difference.
And do you know how many companies have joined AIM this year so far?
4.
1. What? 1 company. And you know, last year it was 10. So there's been a big drop. And also, don't forget that there's 70 companies left AIM as well in something like the last 6 months, and we've seen a glut of them leaving recently, haven't we? Delisting, going private, mainly because of the prohibitive costs. You know, you've got a lot of cost of listings there. You've got the maintenance charges. I think it's like £500,000 or something like that at the moment to keep to pay the nomad and everything. So you can understand why a lot of these companies, you know, staying private is becoming the preferred option for these SMEs, isn't it?
Yeah, and the London Stock Exchange really doesn't really care very much about AIM, doesn't get paid on liquidity or anything else. So, you know, the model they've now created. So you wouldn't mind paying $500,000 if you had the liquidity. You don't have the liquidity, therefore, come on, NASDAQ, please come. You know, and the interesting thing is that there is going to be another listing on AIM next week, next Friday, called Electric Guitar. It's a technology play, nothing to do with electric guitars. And we hope to catch up with John.
It's all about that first-person data, isn't it, and capturing that. It's very interesting, actually. But just going back to that about NASDAQ, do you know they have 7 exchanges, and they include Sweden, Denmark, Iceland, and Finland. So they've already got and they've been eyeing up the UK for years, apparently. So I hope there's some truth in this story.
Yes, I do as well. I think it'd be amazing if they do. I mean, just the sheer fact that you would have the opportunity that people who invest on the NASDAQ in the US to come back to invest in the UK would be
amazing.
Even just a drip of that money would make an amazing difference.
Okay.
So, yeah.
Okay, well, as we look out at this week, we started our descent into Ndola, so listen out for those voice notes and the For Zambia special coming next week. I'm just going to say, if you like what you've heard, hit the subscribe and also hit the bell icon for any notifications of future episodes. Thanks for listening.
Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.